Everybody, welcome back to another episode of the Blockware Intelligence Podcast. Today we have a very special guest, one of the guys that got me into on-chain, one of the guys I look up to in a lot of ways, just all-around good dude, good friend, David Puell. David's getting ready to start a new exciting opportunity here pretty soon. David has a long history in the space and has always been a thought leader in the space as well. So welcome to the show, David.
Hey, Will. Thanks for having me. Nice to see you again.
Yeah, likewise. I think we did the last podcast on Hump's podcast. That was like 2 or 3 months ago, I believe. So it's been a little while. How you been, man?
All good. Pretty exciting. Good things coming up. So I'm pretty stoked.
Yeah, it seems like the space is moving pretty fast, and although price has been a little frustrating the last 2 weeks, there's no shortage of new news. What do you think about the whole Twitter Lightning thing today? That seems like a pretty big game changer.
Yeah, excited. I think it's one of those little things that incentivize adoption in technical and more importantly cultural forms. I see it more as a cultural event than a technological one in terms of importance. The network effect of Twitter is enormous. So, having that simple availability to transact Bitcoin in that fashion is just amazing. I love it.
Yeah, absolutely. I decided that I'm going to donate all of my tips to Bitcoin core development. I think anybody who donates to me, through the community, I wanted to figure out a way to kind of get back. So hopefully that'll be a nice little donation to the core developers. I think this is like you said, just kind of the tip of the iceberg in terms of the adoption we're getting ready to see with Lightning. You already see in like El Salvador, people are, you can buy almost anything. You saw McDonald's, Starbucks, all these big names down in El Salvador now accepting Bitcoin. So I think, it's just really cool to see the game theory just kind of starting to unfold.
Yeah. And especially in El Salvador, I think it's a very interesting experiment of having like an actual nation state in praxis using Bitcoin as legal tender. That's for sure very interesting to see in real time. Bitcoin is a technology that has, it's very practical in essence, right? It has been battle tested in its 12-year history, but throughout several social, economic, technological attacks and changes for the better. But in terms of Salvador, you never know about the game theory of something unless you try it out in a way. So it's very crucial and interesting to see how that whole experiment develops in El Salvador.
I remember you did a podcast a while ago, and one of the things you said really struck with me was the fact that once Bitcoin becomes soaked into the culture, that's when it kind of, reaches, I think it has crossed the chasm, but has really become deeply ingrained into society. Like, do you still hold that theory? And if so, like, what kind of events do you think would have to take place to kind of initiate that? Because I feel like as far as culture goes, it's one of those things where it's like wildfire. Once the fire starts spreading, it would be really hard for that trend to kind of reverse itself.
I actually think, and I've been thinking that for at least a year or two, that the most interesting aspect of Bitcoin, at least for me, is the cultural aspect. Of course, it's a major economical, financial, technological innovation in that sense, but I'm so pumped and so excited to what it leads to in terms of culture, even beyond politics, and just in terms of culture and how society integrates that technology with itself. It's politically agnostic, but the underlying has very, very ingrained economical ideas that I think are very worth exploring in the long term, like asymptotic supply, the scarcity model built into it, and I also think it's going to be a major cultural debate and political debate going forward. So I'm very interested in that. The breaking point or the tipping point that you mentioned, I don't know. I think whenever you see Bitcoin being referred to, especially by name, in major works of art, I think that's a clear indicator that suggests cultural adoption, whether it's good or bad in that context. When that sort of day-to-day gets integrated into, the writers of the cultural foreground, I think that's going to be extremely interesting. I know of a few artists there's several artists, especially on Twitter, especially within the fine arts realm, a lot of it related to the NFTs, but even before that were very, very much, that are basically using Bitcoin or blockchain in general as one of the main propositions in their artistic theses. I've seen a couple of examples on literature. I know of a very good writer that has included Bitcoin in her novel. So I'm excited to see that when it's published. All that stuff I think contributes to it, because ultimately, even if, let's say, a lot of people don't read James Joyce or Marcel Proust today, or Kafka, right? They are the people who influence the strong writers of today, right? To give you a context. So having those sort of cultural, literary, artistic landmarks is crucial for any technology getting adopted into the day-to-day life of society. So I'm looking forward to that, amongst other things. But I think that's a good indicator as base case for sure.
Totally, yeah. And I think about music as well. Like here in the U.S., one example is, the whole culture around rap is very, very strong. So, if you start to have rappers, talking about how many Bitcoin they have, or, I'm trying to stack more Bitcoin. I have no idea. I'm like cringing myself out, but, somehow incorporating into the music, I think that would be a huge step forward as well. I kind of want to back it up and just give you an opportunity to explain to the audience kind of your background, and also your background in literature, and how you kind of transition from that to Bitcoin.
Yeah. Well, my major in university was Spanish literature, actually. I don't know. I got into that when I was in high school because I thought, and I still think in a way, but let's say differently, that literature was as a way to swallow the world in a way. If you read the strongest works of art or whatever, you can have like a good thesis of the world, while maintaining a multiplicity of meaning about it. And that's one of the best things about literature as a time investment. That yes, you get to learn a lot about history and politics and the progress of men through time, but most importantly, you get to in a cognitive sense, you get to deal with a multiplicity of meaning, which is not very, very much ingrained in hard sciences or economics or even philosophy. Multiplicity of meaning, a work that is made to be, in a way, misread or misunderstood, or at least have a lot of cryptic or interpretable material. That's very appealing to me. So that's why I think Bitcoin is so interesting to see how, different political and cultural backgrounds identify with it. That's for sure interesting. And the relationship with money as a signal. And then it's also very interesting in the way that literature lets you confront your own, let's say, solitude and mortality in a way, because as opposed to other fields of knowledge, it's very intimate. You pretty much read by yourself, right? You cannot do it any other way. So it's a way to confronting yourself in a way that is very meditative. Um, um, that's always appealed to me, right? It's very individualistic as an art form, as opposed to going to a gallery or a concert or whatever.
Sure. And was there anything within literature that you think kind of geared you towards Bitcoin? Or, like, I think there's several, characters or interest or characteristics or interests that I had when I was younger that kind of made me prone to being interested in Bitcoin. Do you feel the same way? And perhaps with literature in specific?
The I think the progression went. My first approximation to Bitcoin was more economical and technological as opposed to cultural. Cultural and the markets as well is what most interests me now. I don't know. I guess I saw it as a way to. I don't know. It's very different because I'm much rather known as an on-chain researcher and markets guy today. But at the very first iteration of that, I saw it as a way to to claim independence from any outside monetary dependence from either state or private entities towards artistic creation. And I think that's crucial in the sense that artists throughout history in general, or writers, whatever, perhaps less so musicians, but especially in literature, I think historically they've always depended, before the 20th century, mostly from the mecenas concept of the Gertrude Stein or the Medici model of pretty much very rich individuals with very strong interest for the arts, and then subsidizing great artists through that, right? I mean, you have the examples of Ernest Hemingway or Picasso at the avant-garde movement of the early 20th century with Gertrude Stein. The Medicis pretty much funding all the artistic movement in the Renaissance period. And then you have, most royalties as, let's say, half state, half private models of subsidizing most of the Western art throughout history. Greatest example is, the Viennese school of music going back to Beethoven and the Mozarts, the Beethovens of that age. So you have either privatized or half privatized, half state models throughout most of the history. And then in the 20th century, you had the development of ministries of culture and all those state models that would subsidize the arts. Still, especially in places like the United States, especially in the United States when compared to Europe, I think most of the art is funded privately. But one of the main obstacles any artist finds, and I think it's even more pertinent with filmmaking or comic books, because they're more costly in proportion to just sitting and putting something down on a piece of paper. I think maintaining artistic integrity is very hard when you depend on private or religious or political models that subsidize your artistic endeavor. So Bitcoin was very appealing from that sense. I mean, most of my work now is as an analyst with Bitcoin, Bitcoin's inner economics through on-chain and all that stuff. But initially, it was like a very good case of funding myself in a way, and not caring about any political, religious, or even aesthetic proposition that anyone else would impose on me through monetization, right? That was my first appeal, and I think it's very pertinent today, even more so. I would like to see artists adopt Bitcoin, that's for sure, as a way to to claim monetary independence from any private or public third party. That's for sure.
Do you think like the adoption of Bitcoin would lead to some kind of renaissance within art?
I've seen I've seen the case of linking money and art, especially in the Bitcoin standard, right? That's I think that there's a chapter by Saif Dean in which he claims that the decay of the decay of the art, especially fine arts throughout the 20th century, it was directly linked to inflation and the inflationary models that started in 1914 in the inflation models to subsidize the First World War. There may be a link to that, but I don't know. I think I'm not that convinced that there's a one-to-one link in there. And he also criticizes, for instance, the Cubist and avant-garde movements, out of which there's a lot of noise, but there's certainly heavy signal, like Picasso, right? I do see the value in a Picasso, and I think that book makes the case against it in the sense that any art that deviates from realism is not good art. I don't agree with that at all. To give you good examples of pieces of art that deviate from what it's usually linked to realist or naturalist traditions. Picasso himself, most of his work, James Joyce's Finnegan's Wake. I mean, that it's an unscrutable piece of art, mostly unreadable, but I think it's one of the greatest artistic achievements of the 20th century. So I do think, especially in the first half of the 20th century, we saw a lot of great art, even in the latter half. Most of it was related to private enterprise models of monetization, even after the war. That improvement, I'm not sure, because I do agree with Saifuddin that the arts in general are in a very decayed state. That's for sure. But I don't. So, for instance, in fine arts, I think there's a huge bubble, let alone NFTs. It's a huge bubble that is pretty much monetized or subsidized by high net worth individuals avoiding taxes at this point, right? That's why you see, your Damon Hirst and your Jeff Koons going through insane valuations for what in my opinion is extremely overpriced art. So that compared to, and let alone the Jackson Pollocks or Picassos, which are almost invaluable at this point. So I think there's a huge bubble in the fine arts. I don't know if it's gonna pop, right? And I don't know the plays that NFTs are gonna play in that bubble, because NFTs make the whole system much more liquid, and whenever you have liquidity, I think there's more prevalence to have a bubble pop, as opposed to the system we had before, where high net worth individuals would invest in artists mostly based on name, not on the work itself, and pretty much prop up the value of the piece as time progressed, right? Mostly based on trends, short-term trends, but since the valuations got so propped up, and most people that buy at those prices defend those valuations, right, with other potential buyers, it's very difficult and very small to pop a bubble. That in the fine arts world. Music, I don't know. Music, you can actually make the case that it's also in a sort of decadence. But the arts have to go through those periods of aesthetic decadence to renew themselves in a way. I don't know if the money would have such a direct impact on good art when you go back to canonical work, I think it's been several years we hadn't had canonical work in literature, fine arts, and music, and film. I think film is also quite decayed. I don't know. I one thing I can tell you is for sure it's going to give independence to good artists to delink themselves from the trade-offs that their fields um, uh, impose on them in terms of monetary uh, the monetary limits of their field. But ultimately it's up to the artist, right, to produce the great work. It may be a good starting point for that, but trying to predict an art school, a school of art or thought or whatever, it's harder than the market. So I couldn't say.
Yeah, sure. So I want to kind of transition it now back over to on-chain, and kind of
Let's get to on-chain. Like, please. I've gone through my art rambles. That's enough.
Drop some alpha. Please drop some alpha. You want to just talk about briefly just the early days of on-chain, some of the early metrics you got. I mean, man, I remember when I first started learning, I would go back and watch these videos of you, Murad, and Willie with tone vase, and it looked like it was like recorded on a potato or something. You like barely hear you guys, and here you're going through these like very very primitive on-chain metrics. It's just so cool to see how far the space has evolved, and like I can't imagine how it is for you, being in from the very early stages to now seeing where it is. So do you want to just kind of give people a background on how did on-chain even start?
Well, to be honest, I think the credit for the whole field can go to Willy Woo and Chris Berninski. I think they are the very earliest. They're like, let's say, the equivalent to a Satoshi in terms of the field of on-chain analytics. I think Chris Berninski, when he was at ARC, he was the one starting to explore the blockchain as a way to gauge inner economics of Bitcoin. And Willie, he's just like extremely creative guy, extremely like he has a very artistic sensitivity, and I think that pretty much made him invent NVT and go back and forth with Chris at the very start of it all. I think the second great contributor to that was Nick Carter in Coinmetrics, where they pretty much tried to establish a good platform and node operational system where you can extract the data and analyze it and all that. Later, his contributions with Antoine Lecalvé in RealizeCap were crucial. I think as soon as I saw that, I think my journey had begun earlier in the sense that I've gone through Chris and Willie's work for almost a year. So from 2017 to 2018, middle of 2018. And then by then, the publication of RealizeCap was, I think, my turning point. By then, Nick Carter had major contributions in the asset, right? And Dmitry Kalichkin as well. And then I pretty much, with MVRV, that's how Murad and myself became like proposers of the field. I think this was in the second wave, you could say, which started the golden age of on-chain, where you see more than dozens of metrics. I think it's up to hundreds of metrics at this point, which brought on the Hans Hog, the glass nodes, the whale maps, all those guys, into what was a race to the top of having the best metric possible, you could say, by a bunch of brilliant minds from extremely different backgrounds, going from engineering into myself, literature, or computer science, or finance, or self-taught guys, right, without a college degree, that wanted to get in and propose the best way to look at Bitcoin's inner economics. That was very interesting. I think it was like a huge shift away from technical analysis, in the sense that you kind of have very redundant metrics based on similar aspects of the market, all mostly price derived, some volume exchange derived, but for the most part, price derived, right? Like your momentum oscillators and all that stuff. So it was like a huge golden age that I think lasted from, let's say, all throughout 2019 into 2020. And then you started getting institutionalized, mostly by late 2019 into 2020, where a lot of smart retail audiences and institutions, started to explore it in a very deep fashion, right? To get the alpha and also to get a sense of the fundamentals, underlying fundamentals of Bitcoin, because I think one of the greatest institutional misconceptions before on-chain was how do I value Bitcoin in the sense, but the truth is that at a fundamental level, Bitcoin is an asset that is fully driven by supply and demand forces, right? You can go into scarcity models and all that stuff, but supply and demand is ultimately what drives it. So on top of that, what you can do is pretty much study the behavior of investors, buyers and sellers, engage from what the market is telling you at the moment if Bitcoin is undervalued or overvalued, right? As opposed to Bitcoin meeting a predefined number that any formula you want to produce to you. You have to confirm that on the day, in the moment, with on-chain. That's for sure. Like your predictions have to be battle tested every day to whatever realized gap, Coinbase destroyed, transaction volume is telling you at the time.
Yeah, like one thing you said, I never really thought about this. If I was going to go present Bitcoin as a investment idea to an institution, part of that presentation would absolutely include on-chain analytics and showing kind of these underlying market trends over time and where we stand now. I never have been in that situation, so I've never thought about it from that sense. But I think that's a really interesting point. Also, I want to kind of pick your brain in terms of how do you mix on-chain with technical analysis or with derivatives data, right? I think there's this misconception sometimes on Twitter where a lot of times some of these very broad metrics are trying to track things over, call it a 1 to 3 month time frame where we're talking very, super macro, right? And then we have things like SOPR, which are much more short dated. And so how do you look at some of these things in terms of kind of building up the market structure in your head? And then how do you also combine them with like other forms of analysis? Because I know, for example, you look at price structure and just some more basic TA metrics as well.
Well, I guess it's I do have a sense of priority in the types of metrics I study. I would say on-chain is first, then sentiment and liquidity, like derivatives, premium or discount next, and then the last, technicals. One of the reasons is because you can actually gauge price movement and simple visual cues like divergences from on-chain. It's very easy to visualize. That was one of the main divergences into why retail uses, in equities, for instance, uses technical analysis as opposed to fundamental. One, because their time frame is much shorter than your typical Wall Street active manager, but also because I think it's easier to learn, right? It's easier to see a divergence that analyzing several fundamental, analyzing a balance sheet, let's say. It's easier to see and to do, especially in that short time frame, right? But with on-chain, you have that availability that you can visualize a lot of significant information in simple visual cues that, and in a very quick way, right? I would say that as of now, on-chain is about 60-70%, other 20%, 30% sentiment liquidity, and 10% technical. Technical is mostly used, I think it's better used as a confirmator for entries, very specific entries, especially since I mostly analyze the market in, in weekly horizons, let's say, not daily or intradaily horizons. So I have about 10 metrics, I think, that I gauge every week at the very least. And then keeping on the dashboard a few other 10 to 15 that, since they are so cyclical, like MVRV, right? They give you a signal once a year if you're lucky. I check them. I have them on the dashboard, but check them every month.
Nailed it earlier.
What's up?
Multiple nailed it. That's a signal you don't. That's an example where you don't get that signal pretty often. But
yeah, it was like the fifth historical long signal in over 12 years. So yeah, it was good to see it working, still working. That's for sure.
Yeah. So like when you wake up in the morning, I like to kind of ask people, what do you check first thing in the morning? Like I know you, like you said, you aren't an intraday trader, but I like, as soon as I wake up in the morning, I want to understand, okay, what happened overnight and how can I just get up to speed real quick? Do you just scroll through Twitter to check news and sentiment? Are you just going straight to the derivatives data and just checking premiums? Kind of walk me through your process.
Actually, I do that. I think as a first, well, this is more, I don't look at data throughout the day. I think I look at price and all that stuff like 3 times a day or so. Mostly at close and, a couple of times just to have a sense. I think the first thing, since it's so volatile and very much local, so it does need like a daily revision. It's derivatives premium because it's a very important metric while a very dynamic metric, right? So keeping an intradaily check on it is important. Daily closes. For the on-chain stuff, I mostly adhere to daily closes unless there has been like a major event, right? So you want to like check, the hourly resolution of any given on-chain metric, like SOPR, for instance. The daily close hasn't come, so they don't have that value in the time series. You want to go into, 24-hour median or moving average of that metric to see if, anything relevant happened when the market crashed or pump or whatever. So sometimes I do that just in context, but for the most part, on-chain stuff, I go through it on daily closes. Few important metrics. One of them is SOPR, for instance, on a day-to-day, and then just check technicals. But I mostly check the technicals whenever I want to assess an entry or exit of something, as opposed to anything major. I may go on the daily chart to see, let's say, your typical RSI divergence or whatever, and see if there's a huge bearish divergence in price after a major pump. But for the most part, I stick to daily values, daily to weekly to monthly values of technical analysis.
For SOPR, do you use just the normal SOPR? Do you use like a SOPR? Do you check the long term and short term? Or
I actually I mostly use the 3 versions. I think on Glassnode they have your traditional one, the adjusted one, which I think. Yeah, exactly. The one it selects for 1 hour transactions, and then the entity adjusted, which I think it's the more accurate. So I mostly check and validate everything with entity adjustment. But I check all 3 just to see if there's something there, and I try to go, double checking Bitcoin and ETH, for instance. So far, assets are clearly correlated. So whenever you're trying to gauge a bottom, you want to see it in ETH as well, let's say, right? As opposed to just Bitcoin, especially with the available metrics like SOPR, and so on and so on. And then after on-chain, I also look at other aspects of sentiment and liquidity, mostly, funding rates and premium perpetual premiums, but also open interest. I think open interest is crucial to get a sense of how, let's say, overheated the market is in any direction. It's also a great predictor for volatility, right? So when you have huge amounts of open interest and low volatility, you can expect an expansion, and so on. And liquidations, of course, especially after a huge pump or price drop. It's important to see that how much of that levered interest got wiped off the market.
Sure, like I think one example would be 2-3 weeks ago when we had that 20% down day, and you had basically seen futures open interest skyrocket along with funding. Although funding wasn't at where it was earlier this year, when you look at futures open interest, both in BTC and USD terms, it was up pretty substantially over those days leading up to the event. So.
No, and in May, actually, in May, when you saw the 50% crash in May, as he was going down, so it was like the initiation of a trending move, right? Even as he was going down, funding, you kind of saw it going to negative a little bit, but kind of not in love and dancing around between flipping between.
They're basically trying to catch it on the
exactly.
way down.
Right, exactly. So, and you have extremely high open interest as he was going down. So he was like, no, it's just longs getting in. They're going to get liquidated. They have to get liquidated and wiped out before we can bottom. And I actually tweeted about it, at the middle of the collapse. You have some good sense of capitulation, but open interest, it's still exceedingly high. So I don't think it's over. And yeah, it collapsed. I don't know how much after that tweet, but yeah, it kept going down for a little bit. And then finally, when you have complete wipeout of long open interest, you actually found a bottom.
Yeah, I think it was difficult for me, at least. I don't want to speak for you to predict that early part of the move. But once we did start going down, you started to see funding still pretty positive, and you were looking at futures open interest. I think it was fairly obvious that we were going to perhaps go lower. Like I remember when we started the cascade, we kind of bounced around, the like 40K or like the upper 30s off like 38K initially. And I remember like right before I went to bed, I said, I'm going to wake up and this thing's going to be way lower. And I woke up and we were down at like 32K. It was actually like right when we had that last, leg down. So I want to ask you, what is your current market, outlook, and what has kind of been your timeline in terms of an on-chain perspective over the last couple months, and where do you think we stand from a more macro perspective as well?
I'm optimistic, but not, let's say, I'm healthily skeptical of a super cycle, but I'm optimistic in the midterm at the very least. I do think that we saw a good capitulation / deleveraging event in May. We had several months to build a very healthy bottom with negative premium and very good on-chain metrics, turning bullish again. Now we're fighting against, your usual resistances and all that stuff, and you have, your few days to a week of distribution before the latest correction. But right now it's looking healthy. I mean, long-term and midterm and even short-term stuff like SOPR are looking extremely healthy. So on-chain is good. Derivatives at discount pretty much across the board right now, including Binance, which is uncommon, and which had like a huge premium in the last few weeks. I'm very optimistic. I think it's looking good without making any, price goals or whatever, but I'm optimistic short-term, midterm, and long-term. When I say long-term, meaning multi-years, I still expect the cyclicality of Bitcoin to play out in the bear market. I don't know when that's going to come, and at, out of reach top in terms of price prediction. Like that's unpredictable in Bitcoin. Whatever your price is, sometimes that gets double or triple X'd at least. So I'm not sure.
I'm going to timestamp the video and say David Puell calls for $10 million Bitcoin.
No. And not in the near future, but maybe someday. I'm not sure. Maybe someday.
So, like, I want to ask you, do you think we move away from the 4-year cycle, or do you think that's just now kind of this psychological thing? Like, when I talk to Willie or Checkmate, they're very against the 4-year cycle. They think now we're kind of going to become kind of this free floating asset, very similar to the S&P. We see a bit more dampened volatility, but we no longer have these very clear put Bitcoin on a logarithmic scale and just see these clear flowing 4-year cycles. I see arguments for both, but I tend to stand with Check and Willie just because I don't think the sell pressure for miners is relevant anymore. I think especially if you get like an ETF, for example, they're selling pressure. Let's say they're selling 2% of their holdings, like Grayscale, and taking using that as a management fee. And that sell pressure is going to be much more substantial than anything for miners, especially now that you see miners not really selling because they have access to the capital market. So what is kind of your mental framework for that?
Yeah, I agree in the sense that miners may be not an important actor in terms of selling pressure in the market. That's for sure. That's very clear, especially in this halving, right? That transferred to exchanges, financial instruments, and the new institutional money coming in, which it's holding a lot of the supply, or increasingly so, a lot of the supply, and OGs as well. But selling pressure can come from anywhere. Like the case of miners not having that much influence on the market is no counter argument for active managers in Wall Street who are optimistic on Bitcoin, but they still active manage, right? They still take profits. OGs do so as well, especially when they see extreme exuberance in the market, like anyone would do, especially if you have 6, 5, 6, 7, 12 years of experience holding Bitcoin, right? Sometimes you take profit. You take precautions at least to, let's say, have a good base to survive any bear market, right? I do think Bitcoin is always going to have extremely strong holders. I think a lot of them, if not the majority, are going to be your typical early adopters have stick with it for 12 years now. Why wouldn't they stick with it for several more? And I do think that there's a case for having a, let's say, more intelligent market, because the investors handling Bitcoin now are more institutionals and long-term thinkers as opposed to retail. So you have, you may claim that reduces the probability of bubble developing and then popping. But institutions do FOMO as well. It's clear for since the early 20th century, you've had severe bubbles, right? In the S&P and the Dow. So there's an underlying nature in humanity that always makes up for cyclicality in markets, for if you want to call it, for animal spirits in the market, for booms and busts, and I think it's part of Bitcoin's maturity to accept itself as an asset that goes through that very human experience of pumping and dumping markets and having that cyclicality. So if you think long term, Bitcoin is one of the most interesting and important technologies you can invest in, right? But discounting cyclicality from it, I think selling pressure can come from any type of market, market actor holding significant amounts of supply. And I think it's going to end up being about the active manager assessing Bitcoin as it goes forward. But, I think it's healthy to accept that Bitcoin may look like any other asset in that sense of going up and down and having healthy corrections, as opposed to an S&P, which just keeps going up. I think it's healthier to have corrections, even for a year or two, than just keep going and going up. So I'm not sure.
I think when you have these major corrections, it's basically building a stronger and stronger base of hodlers, right? Because every time, you have this big bull run, you get all these new market entrants, and then we have, this major drawdown. It basically wipes clean the slate of all the people that are just in here for speculative purposes. And then you have this higher base at the very bottom that came in through the big bull run, and then they kind of build that next floor to move even higher. I think it's really interesting when you plot out two things. So first of all, when you look at short-term and long-term holders, you see that dynamic that you were talking about a minute ago, where you head into the bull run, you have these older, more experienced market participants start to trim their holdings. They don't sell the absolute top, but they don't care because they accumulated through the whole bear market. So, they're slowly distributing their coins throughout the bull run as retail or, new market participants come in, which is defined by the short-term holder metric. You see that increase, into the peaks of bull runs and then declining back into the bear market. So when you plot both of those out, you see this very clear kind of, pattern like that. If anybody listening on podcast won't be able to see what I did with my hands, but they diverge from each other. And there's almost this mean reversion within the two where, smart money sells into strength, accumulates into weakness, and then vice versa with the short-term holders. One other thing that you said was interesting was when you're talking about, kind of the fact that it doesn't matter who has the supply, as long as someone has a substantial amount, they can potentially, shape the market in a way. When you plot out, all the entities, let's say below 10 BTC, and then divide that by the overall circulating supply, so basically showing the portion of supply held by retail, let's say, over time, that's up only. And you see this spike once again, like as we have these big bull runs, but over time, this is literally just trending up and to the right. And then when you do the same thing, but with whales, and then you filter out exchanges and grayscale, what you see over time is the complete opposite. It's basically going from the top left of the screen down to the bottom right. So what I'm trying to get at is just the fact that you have this supply, this healthy, supply distribution trend where it's nowhere near perfect. Like if you had a Gini coefficient for Bitcoin, it wouldn't be perfect right now. It still is fairly concentrated, but for an asset that's only 12 years old, I would say that it's fairly healthy, and also it's definitely headed in the right direction.
Yeah, well, the whole argument about the Gini coefficient being extremely high, I think it's overplayed because an entity doesn't equal an individual. There's a lot of nuance in those addresses, right? I think that's understood to some extent by now. So whenever you have the argument about Bitcoin having the same Gini coefficient of North Korea, that's an absolute lie, an absolute lie. So that's first. Second, you may claim that the Gini coefficient of Bitcoin is not ideal. I would say it's fair, right? It should have early adopters that assume risks early than everyone else. I think they should have greater ownership rights, you could say. And I think it's a fair system to distribute supply. But even more importantly, the trend of distribution of supply, it's extremely healthy and has been for 12 years, precisely for the two charts that you mentioned, right? I mean, that's exactly what adoption is, not anything else. So as long as that trend continues, it's perfect. I do expect it to continue. It's just a natural thing about adoption curves. Supply is going to get distributed, and even more so when coins get lost and all that stuff. And ultimately, going back to a narrative of Bitcoin, first serving as store of value, then medium of exchange, it's very important to have that sense that you need to have supply distributed among active participants, to have counterparties out of which to transact from, right? And then, so yeah, I do expect. I like that. I think it's a fair system. I think it's been on a very healthy trend for 12 years, a trend which I expect to continue. Yeah, that's about it on that.
Sure. I have another question. So when you look at the behavior of whales, there's this interesting pattern I've noticed where since call it mid-July, whales have been accumulating pretty heavily, and I'm defining that as all the entities over 1,000 BTC, then filtered out for exchanges, QBTC, Grayscale, and the Purpose ETF. They've been accumulating, pretty heavily over that time span, while the number of whales, so the number of entities over 1,000 BTC has been pretty flat. Meanwhile, earlier in the year, when we were in, late last year, call it December to January time span, you saw this huge uptick in the number of whales along with their holdings. What do you kind of make of that? Just the fact that it's fewer larger market participants, because, as you mentioned, one entity doesn't equal one person, right? Either, in some cases exchanges, also they could just be custody solutions. So, although the number of whales may not be ticking up, it could just be, Fidelity Digital, asset, custody service, and they're just, being a client for 100 different whales. It's hard to kind of come to any conclusions through that. But I do find it interesting that earlier in the year you saw this increase in both the holdings and number of whales, while now you're seeing increase in the holdings but not the number of whales.
That last part is a good point, and I have to look at the charts to get the full nuance of that. That's actually interesting now that you bring it up. It's been a while since I checked that chart. Well, at the very least, you can claim that institutions are getting in with all that narrative. Let's just leave it at that, in the sense that even if it's custodians and large entities holding that supply, whether exchanges, mostly custodians, I think, it's all linked to institutional new money, which I think is very provable on chain and very healthy. That's what you lacked all throughout 2018 and most of 2019, right? It's not until the inflationary hedge narrative got major momentum that you saw that institutional heavy new money driving into the asset. No new whales. That's interesting. I don't know if there's a cap on Bitcoin's custodianship infrastructure that may have flattened out, therefore not amounting to more entities on that front. That may be one interpretation. The other one is that maybe, let's say, the majority, not all, of institutional players already got in, and now they're just driving in with more assets and filling out the Bitcoin price movements with active management. So, and this is not to say that there's a lack of interest of institutions. It may be capped momentarily, right? Because if we break all-time highs, I'm sure there's going to be more interest about it, right? So that may be another interpretation, but I have to look at the charts again to have like a full sense of what's going on.
Sure. Yeah, I think that's really insightful. One thing that I thought was really important you mentioned was when you got past that 2017 peak, it seemed like a lot of granted I wasn't around then, but it seemed like a lot of the institutional interest that was kind of, there was chatter about, just completely died off once price died off. Whereas now it seems like we had this 50+% correction, and it seems like the march of institutional interest hasn't slowed down at all. We continue to see interest from, you had like Wells Fargo announced they're doing something with Bitcoin, Goldman Sachs, JP Morgan, all these big names. And these are, all these announcements are coming while we're, down 40, 50%. So it seems like a lot of this stuff is now in place. It's just, it's taking time, and perhaps this was initiated, in the middle of last year. But granted, it doesn't seem like you're seeing that interest slow down, even though price has kind of stalled out.
Well, two things on that. The first one is I think you have a much healthier market structure in general today than in 2017. It was extremely evident, and I think for most institutions and active managers and that sort of psychological profile, that the price was in a bubble. It went up too fast. It was as simple as that. Went up too fast in too short a time. That's it. So it may brought on a lot of interest into the asset, but that's one of the other things that I mentioned in the MBRV article I wrote 3 years ago, which is, game theoretically, in a way, one of the main cases you can make for Bitcoin adoption, it's been its extreme volatility, in the sense that whenever you have those bubbles, everyone knows about it. It's like an advertisement system inherent in the Bitcoin price. So every single person knows about it. But then the ones who stick through it, whether institutions or retail or early adopters, those are the ones who are, who benefit from buying the bottoms and sticking through a bear market and having some interest in it, while it's not interesting to most people. So I think it's an inherent advertisement system that Bitcoin has in its price discovery, which of course Satoshi could have never predicted. But that's one of the reasons I think cyclicality is very important to the health of Bitcoin. Because whenever price goes to all-time highs, goes to X, 3X, whatever, everyone hears about it. And then you have the long-term holders, high time preference people going into it, little by little throughout 2-3 years times, going through extreme whiplash and volatility or whatever. And then they get the rewards as soon as it breaks all-time highs and so on. Now, I think there's enough historical samples in the history of price discovery in Bitcoin where a lot of these institutions and corporations are saying there's enough base to claim an inherent economic health in Bitcoin to sustain us onboarding in it at diminished risk. We may not have been early adopters, but I think it's healthy enough and resistant enough in economic and technological terms to go in. That's one. The other one is just FOMO, for sure. Even if it's, you have your 50% correction, you have to think of it in a sense of proportion. So you say, okay, I have this emerging asset with cap supply that has just basically outmatched in returns any other traditional asset in the world for 12 years, hasn't been hacked, keeps growing, has a huge base and some of the most bright minds in the world. And it has corrections, meaning it has great buying opportunities. So that's as a proportion of, okay, this thing just goes up, but at a price. And those major corrections gives us the opportunity to get in because they're smart enough to balance that out. Maybe it wasn't as smart as getting in 2011, but it's as smart as getting in a 50% correction. So you already have the structure of 12 years of history and you cannot do anything about, I didn't get in 2014. So what should I look for? Any correction over 30, 50% at this point. So that's and I think at this point, that's the best way to think about it, right? Just look for the opportunities and think long-term in the sense that, okay, if there's a non-zero chance that Bitcoin is going to get adopted worldwide in some form, in some major way, shape, or form, I should have built at least some infrastructure on it, have some experience being exposed to it, tinker with it at the very least for a couple of years before the big things happen or whatever, right? So I think it's just a trend which breaches the gap between just the traditional world and the nuances of dealing with Bitcoin in day to day as a business and as a person. I just think it's healthy and let's say standard operating procedure, and when a new and niche technology is being brought in to the mainstream.
I think that's a great place to kind of wrap it up. I don't think that we could have had a better ending point than that. So, David, I just want to say thank you so much for coming on. We've been going for about an hour now. I want to respect your time. This has been an absolute blast. I'd love to have you, back on again sometime in the future, maybe, months down the road. I want to give you the opportunity, though, to just kind of plug yourself in and some of the stuff that you're working on that you want to let people know about.
Just Twitter, at Kenosha King. That's the handle. My Medium articles are there. Yeah, that's about it.
Awesome. Well, thanks, man. Take care.
Yeah, take care. Thank you.